For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about selling high and using a couple of examples, going over what I'm going to hopefully share with traders that will help shift their mindset if they're struggling. And for traders that are consistently knocking it out of the park right now, reinforce some simple concepts. One of the things that traders struggle with, for whatever reason, fighting the inner demons or inner geniuses within, is they will engage in activities that are actually detrimental or sabotaging to actually achieving the results that they're after. And one of the things is when we mention the term selling high, traders automatically assume that means that you want to counter trend or catch the high on an instrument. And so this is where I want to talk about just some really basic things. I use the phrase easy money a lot, and some traders don't like that. They think that, that I make it sound too easy, and, it's not fair to people, and, I'm inconsistent. I change my, 1 week I say this, and the next week I say that, and that's not true. We're always focusing on the same rinse and repeat setups. We talk about first red day, and we'll talk about that in a moment. We also talk about first green day. We talk about 3 days of breakout traders in the markets, whether they're long or short, and we can look at an example of that again as well today. The purpose of the video today is I really want traders to understand that the trader is the number one enemy to their own success in the majority of cases. It's not even like, as I've repeated, even a basic, simple, moving average crossover system works if traders know when to apply it, but also know when not to apply it. Now, we've talked about the ACB masterclass and the coil, and traders are using the coil everywhere, and they're getting stopped out because they're calling every single day that closes in breakout an ACB. And that is not what the ACB trade setup is. And so today, talking about selling high. So when I talk about selling high and we're looking for easy money, I want traders to think about a couple of really simple concepts. Number one, if you are looking to grow your trading business with profitable trades, the second component of that is if you're really serious about growing your trading business with size, are they scalable trade setups? And so what that means, coming back to the first part that we just spoke about, and that is looking for trades where we have our 90-10 edge. 90-10 edge means that there's a high probability that the trade is going to play out. So we're going to look at an example of an instrument that came up on people's watch list because it closed in breakout, but it also was at the high of the month heading into Thursday, day 2 on the backside. And we're also going to look at a pair that gave a signal day, heading into, again, same thing, day 2, Thursday on the backside of the week, a first red day signal. Before we do that, though, I want traders to just listen and understand. There's no critiquing what people have done. It's helping traders evolve in their thinking, evolve in their perceptions, and actually evolving in what you are actually hunting for. What setup are you hunting? And so this is where traders are, we have traders hitting the right instruments for the easy money, and then we have other traders who are taking on a 1090 trade because it's up high. So I want you to just stop and think for a second about how you're approaching it. And the second thing that I want you to do is that if you did take a losing trade today, I want you to go and print off what a winning setup looks like, and then find where you can print off 10 of those and have those for your muscle memory. And when you go to take a trade, does it look like your winning setup? Does it look like your winning setup? Or is it a messy chart and you're just in that headspace, the hour of dog and wolf, where you want to get a trade. You want to get a trade. And it's hard to explain to people, but your mind will play tricks on you. You'll get into a trade even though you know it's not a 90-10 setup. And that's what this video is about. Not only shifting your thinking, but getting better at which instruments you take off your watch list and narrow down to the one or two, or just the one, where you actually have a 90-10 edge heading into your session. We can have a first red day. It breaks down. A new month starts. They pump it up and gives a new first red day signal. It breaks down and pumps up again. But the same thesis can carry out for the entire month. Pound Canadian is a pair that a lot of traders were looking at today. We had it in video yesterday. We talked about a first green day signal coming off the low of the month, a first red day signal starting off the month. We had an ACB trade setup coming on day 2, Tuesday, the front side of the month, that gave a beautiful parabolic, all-in scalable 5-star opportunity going long. The market closed in breakout outside of the high of the current month and also pinned up through the high from back in December. Just didn't quite get there, but almost got there. Didn't quite get there, but closed in breakout. Now, another question I'm getting a lot is, what do you mean by closed in breakout? Now, let's just go back and just think really simple now. The market at 4:59 p.m. New York time closed outside of a previous day's high or low. Closed in breakout. Really simple, and I'm going to repeat this. Keep things simple. There's nothing complicated about any of this. You need to think really simple and just use some really simple common sense. Remember, we're targeting opportunities for setups. We're not just trying to read a market, but we have a market that's at the high of the month. It's closed in breakout heading into Thursday, day 2 on the back side of the week. And tomorrow is the last trading day of the month. Now, before we do that, I want to just walk through. We have our first green day. The market dumped down, went into consolidation, gave a first green day, closed in breakout. Now, I want you to look at every single day since then. We've made higher highs and then an inside day, and higher highs and higher lows again. We broke a daily low on Monday before closing in breakout again, heading into Tuesday, which gave us the ACB textbook perfect trade setup. This market is not 3 days of breakout, traders. This market is in a trend. It's trending. That's the first part I want to point out. This is not 3 days of breakout, traders. Now, before we go any further, I want traders to understand one important thing about every single signal in the playbook. We have day 3 longs and shorts, page 51. Day 3 breakout traders, whether they're long or short. We have first red day signal days, page 58. First green day signal days, and of course inside days, which can show up anywhere for either reversals, false break reversals, trend trades, or just reversals in general without the false break. Now, these 3 signals and the signal day can show up in any type of market. We can get these signals in a trending market. We can get these signals in a broken down market. So we can have a first red day in a market that breaks out from a high, okay? And the new month starts, we can have a market that breaks out long within the month, closing in breakout, and give us a first red day signal in a broken down market, in a trading range. We can get a market giving us a signal in a broken down market. So we have a market opens up in a new month. Just before we open the month, it pumps up, gives a pin high, and gives a first red day signal in a market that is already breaking down from being in a previous monthly range. We can have a market that's inside of a previous monthly range. We have selling occurring at that level the previous month. We have a market that goes in breakout long 1, 2, 3 and gives a first red day signal inside of that monthly range. So the most important thing right away to understand is that you can have different types of monthly templates, trending months in breakout, trading ranges, and broken down months that are breaking down back against a previous monthly range. That's number one, signal. What type of signal are we getting? And number two, is there a setup that aligns with that higher time frame thesis? So coming back to our pound Canadian, we have a market that is still making higher highs and higher lows. It takes out the monthly high, it closes in breakout. The next most important thing is there a setup on the day? But number one, we have a strongly bullish market. Now we're going to contrast this with another instrument that gave us a signal in a moment, but I want traders, for lack of a better word, this is called tough love, but you need to use some common sense. That is the bottom line. You need to use some common sense. Remember what I said in the first slide. Where's the path of least resistance for the 90-10 trade setup? Not trying to catch the high in a market that keeps going higher. Selling high can offer us the high of the session, the high of the day in a market that is in a selling setup. A sell setup. A selling setup. Not because it's up high, I'm going to try and sell it. That is not the same thing. Remember what the title of this video is called. Mindset Reset. Mindset Reset. Okay, so the instrument shows up on my watch list. Does it set up? It shows up because it closed in breakout at the high of the month. Yes, we may have got a selling setup. Now, the second part I want you to think about is, okay, we're looking through 3 or 4 instruments that come up on our watch list on the day. We want to target the one that offers us the easy money, the slam dunk. Now, this market's trading higher. We have 8:30 major red news, unemployment, and something else, but it's not non-farm payrolls. It's not FOMC. It's not CPI, which means that we wait till the news is released and we go back to our original thesis, which means we either have a sell high setup, and I'm not talking about catching the high. I'm talking about a sell setup that I can make money from. And a sell setup on this instrument should be a minimum of 50 pips. Now, the ACB minimum on a currency that I will target on a major pair on a 5-star setup is a 100 pip target. That is the minimum. I will not take the trade if I cannot get 100 pips. So if this is a session trade setup, the minimum I'm going to look for is 50 pips of a parabolic selling setup. I'm not concerned with trying to catch the high. I'm looking for where is the easy money trade setup. So when we come to the day and we have an instrument now that has, number one, it's closed in breakout. This is not an ACB template. ACB templates don't have extreme highs and lows unless they are coiled tightly and already broken down or broken out again. Now we have a market that has gone down into the low of our last U.S. session low made prior to the close at 459 New York. New York close is the only time I need to pay attention to. People want me to change the time on my charts and everything else. I could care less what time it is on my chart. It's New York time. That's all you need to be aware of. It's New York time. I don't care what anybody else says. New York time. So now here's the next question. What type of template am I in? It's a dump, coil, pump template. That is not a sell setup. Now traders took this today trying to sell it. It's a dump and pump template in a strongly bullish market. The next part that I want you to look at is the space in the breakout. This market has left space and it's coiled into our London window and continued into our US session. This is a dump and pump template. This is not an ACB template. ACB templates are not stretched far apart from the high to low. They're tightly coiled sideways. This is not a tight coil. We have a range up top that's dumped down. And if we just make it even really simpler, now we have a market that's now broken a little diagonal trend line and it's heading back up. That's a dump and pump. Now, the reason why I'm emphasizing these points is because traders will dig in and argue. Now, here's the thing I want you to listen to closely. Why would arguing fix what's going on in your head about a trade that's not a short selling setup? It doesn't matter to me what you do, but don't call this a sell setup. This is not the best instrument on the day. Trying to sell something because it's closed in breakout at the high of the month, but it's still going higher. It's still going higher. It's been making higher highs and higher lows every single day for the last 2 weeks. This is a coil for an explosive move. Let the market give you a signal first before you try to catch the high. What's the signal? A first red day. A first red day would be a great signal here before I try to catch the high. That's the easy way to let things set up. Now, there's no setup for here. I'm not interested in buying this today either. I'm not looking to buy high. I'm looking for where is one of my setups where I have a 90-10 edge, and do I have any 5-star scalable opportunities? So the whole point I'm trying to emphasize with this is for traders' benefits that are trying to constantly sell something because it's up high or buy something because it's down low. There is no sell signal. There is no sell setup. So just trying to sell something and putting your EMAs and all that on there, and there's not even a setup. With the coil on an ACB template, the last thing you do, now listen again, the last thing you do is put the EMA coil on there after it's all set up. You don't put it on there and then look for a setup. It sets up and then you put the coil on there. This is not a selling setup yet. Now let's contrast that with another instrument, the euro, that came up on people's watch list. It gave a first red day signal. Now I want to just repeat this to traders. Don't take this the wrong way. This is designed to help you start thinking differently, start seeing the market differently, and looking for where the easy layup, the slam dunk trades are, regardless of what anybody else says. Because when the easy money sets up, you almost can't screw these trades up. You can't lose on them. That's the whole point. Now let's just step back for a moment. We had a first green day signal at the beginning of the month. And the market it pumped up, traded down into the first green day signal, which you'll notice came from the previous month. Right? Back in January, we traded down into that. We started the new month with the new first green day. We pumped up and dumped down into it, and then we went higher. Higher highs, higher lows, week 2, week 3. So we're trading up high now. We haven't broken any monthly levels yet. We're inside. A question I got from a trader yesterday is, can you go over markets that are inside? Now, again, master the process. What type of month are we in? A first red day or a first green day? So we have a market that's pumped up higher and then dumped down again into our green legs. We're dumping down into our green legs after making higher highs. So week 1, week 2, we go up a second time now in towards the high, pulling back, and a third time on Tuesday at the highest closing price of the month. Now here's something I want traders to think about. We haven't broken any monthly levels. Wednesday closes as a first red day signal after 1, 2, and 3 pushes up into the high. 1, 2, and 3. We had the highest closing price and then a first red day signal, which if you go back and watch the video in the first red day section, first green day section, about Wednesday is the signal day, the midpoint range of the week, and the signal day. We're on week 3, week 4, closing out the month. It's a shortened month. But now here's the next thing I want traders to think about, because this is all about just simple common sense stuff. Traders are saying, oh, it's inconsistent, you're contradicting yourself. No, I'm not. What setup are you hunting? I will repeat this again and again and again. Do not get caught just guessing. The traders that hit this trade today had easy money. Now let's go back and look at the pound Canadian. What signal did we have for selling? What signal is there? What setup was there? Nothing. So shake the mentality of it's up high, I'm going to try and short it. That's not a setup. Now, traders who were on the euro today had easy money. First red day, we had 8:30 major red news. Now, day 2 on the backside can what? It can reverse the range. Day 2 on the front side can expand the range. Day 2 on the backside can expand the range. But what instrument gave us a signal, and then how does it set up into the session that you're trading? Now, heading into our US window, the market has made a high on the day. It's broken the low of day level, which means we have a first red day signal, and then we have lower lows, and we've formed a very nice geometrical rectangle heading into our US window. 8:30 major red news, coiling sideways, lower lows is a potential setup for the pump and dump. Now remember, what are we looking for? Like really, what are we looking for? We're looking for the path of least resistance and easy money. The easy money trade is aligning ourselves with signal day setup and the higher time frame template. If we go back and look, we have a market that's pumped up, pumped again, and then pumped a third time into the highest closing price of the month. Maybe this middle structure is a potential target if this first red day trade succeeds. I drew this on yesterday's gold chart, or the 2 days ago gold chart. We had low hanging fruit underneath. If that market moves quickly, it won't come back. Why won't it come back? Because if it comes back, it allows these traders to get out of losing trades, which means it potentially could be an ACB first red day trade because it may go to the close of the day. Now, when we zoom in here, after our major red news, we have a 5-minute chart. Major red news is over. What do? We go back to work. Entry, pin hammer engulfment, stop loss, our break-even level, and either hold till close or setting the low as a potential profit target, which has just been taken out, and we're half an hour from the close of the day. This market may just trade sideways at that level into the close. Now, let me reinforce the thinking here. I want the easy money. I'm not looking to try and catch the high. I repeat this almost every single video. And traders say, oh, I've seen you do this before and that. No, you haven't. I'm looking for a setup. And if I have, maybe I sold high in a market that was broken down. Maybe there were 3 days of breakouts in a month that was broken down. It's not just about trying to catch the high and something that's up high. Let it give you a first red day at least before you try and sell that. Now, this may sound a little harsh, but do you want to improve? I'm the voice inside your head saying, why did you do that? Now, the best part about this is that if you can learn from this, you can earn from it. That's right. If you learn from this, you can earn from this. Lots of traders hit the euro, the Aussie dollar, very similar setup to the euro. Very similar setup to the euro. New Zealand dollar, not quite the same, but subtle similarities. The pound, not quite exactly the same, but similar. High of the month, close. Wasn't in breakout, didn't give a signal day, but it reversed. Now, if we look to the left, if we bring our high of month level across, there's selling over on this left side. It's possible we could get a sell setup on the pound today. But I didn't get a signal on that. It didn't close in breakout, so I'm not even going to bother looking at that. If traders want to examine to see how that's set up, they can do that. But I'm talking about a pair that actually gave us a signal, and then it set up on the day. Lower lows, coiling sideways into the open underneath of closing price. Pin hammer engulfment after major red news. Entry, stop loss, which would be the extreme of our news candle, a break-even level, in either setting a profit target or hold till close. That's it. So hopefully this has had an impact on traders who are constantly looking to buy the lows on something down low or sell the highs on something that's up high. Signal days. And then how does the market set up on the day and how does it behave into the session that you're trading? That is so important. This was easy money. And I will say that. It is easy money. What's hard about this? Where's the stress? Where's the emotion? Where's the thinking? And where's the management? There's none of that. Entry, stop loss, break even if you didn't do that. It's hold till close. And why is that? We have a higher time frame thesis in place. We've pushed up into the high of the previous month, highest closing price, a first red day signal day, and then a perfect shorting template on the day after major red news, a 1-bar stop, taking out the low and going to a close. Keep it simple. I repeat, keep it simple. The path of least resistance. Which setup are you hunting? So important. This is easy money. This, trying to counter trend a market that's in a trend, is not easy money. And even if it did break down, let's suggest that it may have broke down. Where's the scalable part of this trade if it was to break down? We're trading into a trend. Where's the upside on this trade if we scaled in? Well, we're aligning ourselves with a higher time frame thesis that this is going to crap the bed and take out that low. Keep things simple. Maximize your opportunities when they present, focused on the highest probability trade setups, not I caught the high or I caught the low. Now that's my mindset reset for today. It's the School of Hard Knocks. And if you don't learn from it, the School of Hard Knocks gets harder. So take my advice to heart. It's there to help you. That was easy money. There's no contradiction there. Nothing's changed. Every month you're going to get different templates, and you can get first red day in markets that break out again. I'll say it again. They can break out and trend and give you a first red day, and break down and fail on the backside of a month, or even on the front side of a month. You can be in a market that's in a trading range and you can get a first red day. Where's an example of that? Right here on this month right here. Right here. There's a high and there's a previous monthly high. There's a first red day signal inside of a month in a trading range, a larger trading range. And we can get first red day signal in a month that has not broken any monthly boundaries. Master your craft. Master your setups. Find the instrument that gives you the best setup. Sit on your hands and wait. If you want to be frustrated, if you want to get angry, if you want to be emotional and you want to think about things and keep trying to counter trend markets that are in breakout, keep trying to catch lows or catch highs. The easy trades, I'll repeat this in closing, the easy trades are after the market gives us a signal. Quit trying to get the extreme. That's not scalable. Get off the little 1-minute charts and lunchtime macros and morning macros and everything else. What setup are you hunting? What setup are you hunting? Print out the charts, print them out, put them on your wall, and every single time you're going to take a sell trade or a long trade, a buying trade, look at those templates and ask yourself, is this a best trade setup candidate? If not, next. Taking losing trades is only going to keep you frustrated and in the retail losing cycle. And I'm going to say this and say goodbye. Stop taking losing trades and start trading winning trade setups. That's your mindset reset for today. I love you. Love you all, and I appreciate you. Take that to heart. Learn from it and then earn from it. Have a great day, traders, and may the markets go with you.